Good afternoon, good afternoon, good afternoon. This is B Steve again. And it's been a while since the last time we've spoken, and been getting my new computer, and then I had other things that I'm trying to deal with personal. But I'm glad I'm back again. Now, the last time we spoke, we talked about the standard deductions and what's the benefit for each filing status, which is single, head of household, and married filing generally. We had talked about that last session. Now today we're going to talk about itemized deductions because you can get most benefit from your taxes by writing off certain things. And in order to qualify for this stuff, you will have to meet certain qualifications, if I may say, put into other terms. Now, in order for you to get the most tax benefit and write off certain itemized deduction, which is listed below the standard deduction, it would have to exceed certain numbers according to your filing status. Okay, so I'm going to go one by one. Okay, if you look below, you see the itemized deduction. Now you can write off medical deductions, taxes like real estate taxes, state taxes, interest, mortgage interest, and contributions, cash contributions and non-cash contributions, and miscellaneous deductions, such as lottery losses and so forth. But I will go into more detail within future sessions. Now, in order for you, put this one back up. If you look at the itemized deductions, any amount for one or more of these itemized deductions will have to exceed $12,000 if you file if you're single. Again, one or more, any amount for one or more of these items that are listed on here will have to exceed $12,000 for single status in order for you to qualify for the itemized deduction, which will give you more, which will make your tax return more healthy as far as getting more refund or reducing the debt to the lowest possible. Now, as far as head of the household, any amount for one or more of these items on itemized deduction will have to exceed $18,000 in order for you to get credit, in order for you to get more back on your refund or less or lower the tax debt that you may owe. Lastly, married filing jointly. Any amount for one or more of these items under itemized deduction will have to exceed $24,000 in order for you to get more back on your refund or lower the tax debt on your return. Okay. Now, what I did was I provided some examples at the bottom here. Okay. I'm going to go over this example really briefly. Okay. Let's say Edna, she's a single tax preparer. I'm going to put that there so I can be as detailed as possible, because some people is not as detailed as me. So I want to make sure I try to explain to everything to make sure there's an understanding here. Okay, let's say Edna, she's a single preparer. Okay, now normally if you don't have anything to itemize, she would take the standard of $12,000, which is deduction. Now, in this example below, let's say that she made $50,000 for the year, and she made cash contribution of $5,000, and then she has a mortgage interest from her 1098-T, which is $20,000. So her total itemized deduction is $25,000. Okay, now because it went over her $12,000, which is the standard deduction, she will get her deduction will be $25,000 instead of $12,000 because her deduction exceeded that $12,000 amount. Okay? All right. Now, with that said, her $25,000 is subtracted from her income, which makes her taxable income 25,000, which is probably low. So her tax liability will probably be in a reasonable size. Now counting the withholdings from your W-2, if your W-2 withholding is higher than your tax liability, most likely you will have a refund. So that's an example of how the itemized deduction works. Okay, so this is just a brief overview of how itemized deduction works and when can you take it. Because a lot of times, like I said, you have people who go to these stores and they donate a cash to the church and they think they can write it off. And they was like, well, I paid $500 in church, why can't I get a deduction? But yeah, if the cash contribution is the only thing that you gave and is less than the standard deduction was $1,200, it's going to take the $1,200 instead because they're going to go what the highest is. Now, I understand with the new tax law now, you could take the contribution as an adjustment instead of the itemized deduction. And I think with the adjustment, it only allows you up to $300. But I will probably go into that once I cover that topic. Okay? If you have any questions or anything like that, you could always leave a comment on there. And I thank you for listening to this short presentation of how itemized deduction works. Now, my next topic, what I'll be talking about is medical. I'll probably go in more to debt and medicals because I believe that a lot of things you don't know about medical, and which I didn't know at first, and it kind of shocked me. But anyhow, that would be medical will be the next thing that I would talk about, and we'll go over some of the things that you can deduct and what you cannot deduct, and some things that you can deduct, but there are exceptions to the rule here. See you next time. Thank you.